Hi guys, we are on to itemized deductions, and that's Schedule A right here. You can see on the left, I just selected it, and I'm going to click Add a Copy. So now we have a copy of our Schedule A itemized deductions. And now we're going to continue down the problem. So we have the itemized deductions section, mortgage interest on their main home. So we'll just scroll down to mortgage interest, and we can see all these numbers are blue because they should be reported somewhere else. So with mortgage interest, we are going to say that this is reported on a Form 1098 because that's the standard. This is where nearly everyone enters their interest. And we'll just use the same information. We'll use the same information that they used for the interest from the bank. So we'll just say central bank. We'll leave everything else blank. Box 1, we'll put 10,500. That's it. And it's green, so we're correct. We'll click back. Now we have real estate taxes. So state and local taxes, income tax, sales tax, and here we have real estate taxes down here, and it is green. So we just enter our real estate taxes in here. These aren't reported on any form. Personal property taxes. So this is things like vehicle registration fees or registering a boat. Which should be right here. State and local real estate taxes, state and local personal property taxes. So remember, for your vehicle registration fees, it's only the portion that is based on the value of a vehicle because taxes are a percentage of value. Okay. Any other part of the vehicle registration fee is considered a fee and not a tax. Okay, doctor's expenses unreimbursed by insurance. So medical and dental, we have at the top, $7,400. Now, we can see this is blue, so we've got to drill down. We're going to click the folder. Amount paid for marketplace insurance. No. Adjustment for premium. No. We want actual medical expenses. So doctors, dentists, and hospital fees. That sounds like where we want to enter this. It's green, so we'll just pop it in and click back. Medical insurance premiums. So that was the first section. We'll go back in up here at the top. So medical, but this is not marketplace. We just want general insurance premiums. So for coverage, amount paid for non-marketplace plan. So that would be just general insurance premiums. In real life, you would need to ask the person to make sure, but we'll just do general. Now we have some more stuff, so we're going to go back in. We have some prescribed medications. So let's look for medications. We'll go, it's not insurance premiums, prescription medications and drugs, 1995. Vitamins. Are vitamins includable? Well, we would really need some more information about the vitamins. We would have to know that these vitamins were prescribed by a doctor. And since it doesn't say that, our presumption is going to be no, it is not deductible. So we're done with the medical expense deduction. Let's see if they get a medical expense deduction, because remember, it's going to be limited. This total amount here at the bottom, $11,795, it's going to be limited by 7.5% of their adjusted gross income, which you can see being calculated right here. 7.5% is $1,495, and so they still get a deduction of $10,300 because they have lower income. But the fact that they spent $7,400 on medical expenses is somewhat unlikely, or certainly uncommon, given that they only made $30,000 during the year. Okay, so back on Schedule A, we're going to go to charitable contributions, and we're going to go under cash or check contributions, 50% limit organizations. And when it says 50% limit, it's referring to, it's just referring to that general limitation, which has now actually been changed to 60% of total income that they can contribute. Contributions were made over the course of the year, and no individual contribution was more than $250. Other than cash or check, if gifts, that's where you enter it down here if it was more than those amounts. Okay, tax preparation fees for their 2017 return were paid in 2018. So let's see, this used to be an other itemized deduction. Let's see if we can still. Okay, I was just double checking, but it's correct. It was repealed, so those are no longer deductible for 2018. So those are not includable. Number 10, lottery tickets bought by Esther during the year, $750 of winnings. So we already got those winnings, right? And they say $750 is what she spent. Her winnings were $940. So remember, we can deduct losses up to the amount of winnings. So our loss was $750. That's what our cost was to win $940. So we are able to deduct $750 of expenses. Now they changed the form, but we will enter it right here under other. So we'll go open supporting form. And here they're listing the other items that are, so here we have gambling losses, and this cell is green. So we'll enter our losses here. And you can see we don't have an option for entering our fees for filing our tax return. Okay, so that was our last one. Now there is one other thing they talk about here at the bottom. Because the Johnsons live in Florida where there is no state income tax, they deduct the estimation of general sales tax related to the area they live. The most efficient way to do this is using the sales tax calculator on the IRS website. Now, most softwares, I know TurboTax does it very well, they actually estimate the state taxes for us. So this is where we see if you elect to include general sales taxes instead of income, check this box. So we check this box. There we go. And then here we'll drill down. Well, let us drill down. So that's where we can put the notes. But to drill down, so we've got to figure out where we are going to enter our total sales taxes. So we'll go into the blue box here and click the folder. So that's going to bring us down here and see that they are doing it for us. They have the state general sales tax rate for Florida selected. So they want to know the number of nights they were there. Now, they never told us that they lived anywhere else. So we'll say 365, which let me just check how many nights were in 2018. So how many days there's 365. Okay, so that's correct. So 6%. We'll presume there's no local, and it will just now calculate for us based on their income, their state sales, residency and sales tax rate information. And then this is a state and local general sales tax deduction. Now the amount should be flowing for us, and we just click back. Let's see here. There it is, $747. So that's how you enter that. And that is all. We want to make sure under the required last section that we say they do not want to contribute to the presidential election campaign and do not want anyone to be a third-party designee. For missing information, make reasonable assumptions. They had qualifying health coverage all year. So those are 3 things that we do want to look at when we preview the form. So first, let's take a look at the amount of Schedule A, and then we'll go over exporting the form. So if we come here, we can see here standard deduction or itemized. Their standard deduction would have been $24,000, and they're taking $28,757 instead. So that's their total itemized deductions. You can look at Schedule A for your calculation on your post in the group, and make sure you all have the same numbers and that it makes sense. But it's fairly straightforward. The biggest calculation that probably most people miss was the sales tax, right? Because it's a lot easier to do it with the software. But if you had everything else, that would be great. Now, of course, medical expenses was a big one to calculate as well. So, there's no pressure if you got it wrong. The point is just to try it out. Please, please, please do not feel like that's why you're not being graded on it being right in the first post, because that's not what it's about. Getting stuff wrong as part of this is totally normal. Taxes are super complicated. The important part is that you tried and you walked through the steps, because then when you see the numbers here in Tax Act, it's going to make a lot more sense to you, right? Okay, I'm going to end out this video, and the next video will show us reviewing the tax return and exporting the final PDF. See you then.